for today. Many of us are looking for sound investments, but few find opportunities that truly make a difference, both to our portfolios and the communities in which we invest. We're here today with some insights to help. I'd like to introduce our two speakers, Alexa Blain, co-founder and managing partner at Deetken Impact, and Kelly Gauthier, managing director, Impact Advisory, Raleigh Assets. We'll have some questions for each of our speakers and then open the floor for you to ask them any questions you may have. First off, may I ask you to introduce yourselves and your company? Alexa. Oh, you're currently muted. Let me just unmute you. Give that a try. Can we hear you now?
Can you hear me?
Yes, perfect. Go for it.
Alexa Blain, managing partner of Deetken Impact. We are an impact asset management firm focused on Latin America and the Caribbean region. We currently manage 3 funds, one focused on the power of women and girls in Latin America, and 2 funds focused on sustainable energy, one in the Caribbean basin and one in Central America.
Great. And you, Kelly?
Hi, thanks for having me. So my name is Kelly Gauthier, and I'm the managing director at Raleigh Assets. We are an impact investing asset manager, and we focus specifically on impact investing across all asset classes.
Great. Now, first thing we should really start on is let's just check we're on the same page. You know, there's the whole thing about impact investing is that this decade has already been defined as the decade of action, and the role of impact investing in fighting climate change and achieving the United Nations SDGs. And private capital is absolutely essential to get us there. But let's just understand, really, what is impact investing?
Yeah, I can start there, Victoria. Thank you, and I agree with the decade of action, and that's something that we're actually focusing on here at Raleigh as well. So in terms of impact investing, the terminology can be complicated and confusing, and it can be a barrier for some folks even dipping their toe in between responsible investing, sustainable investing, ESG, and impact. So the way that within the community that we define impact investing is really focused on intentionality. And so looking at that intention within your investments to not only generate a financial return, but to create a positive impact either on the planet or on people. And so that intentionality needs to be present both in the investor and in the investee. So the investee has to also be looking to intentionally create that impact. And then between them, they need to be measuring that impact and being accountable to the type of impact that they're trying to create and how well they're actually doing at doing that.
That's really interesting. I mean, the 2 things I'm hearing are intentionality and measurability. So yeah. That seems key. Kelly, from your perspective, not Kelly. Right. I'm pointing at you, Alexa.
So, Kelly, it turns out we are on the same page. I totally agree with that definition. Impact investing, it's really about that intentionality and being deliberate about where you decide to place your capital. And like you say, for companies, who you raise your capital from. And it's not about exclusions, right? It's not saying, I don't invest in this or I don't invest in this sector. That can be part of it, but impact investing is really about, selecting your investments in a way that is designed to achieve a specific community or environmental benefit, and is also, where you are looking to achieve a financial return.
Mm-hmm. So tell me a bit about the sort of history of impact investing and its growth as an investment approach. Alexa, why don't you start on that one?
Sure, I can talk about it from my perspective more as a fund manager. I think Kelly has a much more broad-based market view. But speaking from our perspective, when we started this business about 12 years ago, impact investing didn't really exist, or it certainly wasn't well known. And we really founded this business in part because this is how we wanted to invest, right? We wanted to be able to put our money to work in a way that was in alignment with our values. And at least, as Canadians, there weren't a lot of options, right? I think the impact investing market has grown more quickly in Europe and in the United States, but at the time there just weren't products available for people like us. And since then, there's really been a proliferation of funds, and I think also the emergence of some really high quality advisors and intermediaries like Rally Assets, and that's helped a lot. But still, impact investing is mostly private market products. It's still not typically offered by mainstream banks or through traditional channels, so it can still seem kind of opaque to new investors that are coming into the space. Mm-hmm. And I think now we are starting to see, with the assistance of intermediaries and the rise of some lower risk products as well in the space, the contribution of blended finance, which is helping to de-risk a lot of products as well. That just recently, at least from our perspective, we've started to see a surge of family offices and foundations enter the space. And, we welcomed, some new investors into our funds last year. And many of them, this was their first impact investment. So that was really exciting.
Yeah, absolutely. Kelly, from your perspective.
Yeah, so I don't disagree with anything Alexis said. I think the only thing I would add is really across the growth across asset classes. And so I think even 3 or 4 years ago, impact investing was very much seen as only being in the private markets and being accessible to accredited investors or institutional investors, and that ESG and responsible investing was the domain of public equity and fixed income. And so I think what we've seen is that, if we go back to the concept of intentionality, I think that what we've seen is investors wanting to intentionally make an impact across their asset classes, and very different kinds of investors coming to the table to have that conversation. And I think that's driven entirely by where our social dialogue is at, where the types of conversations that you're having at the dinner table, be that, with colleagues or your family or your children around these topics, and how those relate back to what you're doing at work and how you're investing your capital.
Yeah, I think it is very interesting, because it is all about alignment of values and actually getting that, now you have an option to do so when you're investing. But you touched on this, Alexa, that we've seen a growing number of family offices and foundations investing for impact. So why is this a good fit for them?
I think the thing that makes foundations and family offices a little bit different from other institutional investors is that you're really acting as kind of like stewards of a legacy, and there can often be very strong values behind that. And I think for that reason, family offices and foundations can be particularly thoughtful about where they're putting their money, and there's a real desire to know, what your capital is doing on the ground. And I think impact investing can really meet a lot of those requirements in a way that perhaps other investment approaches don't. Because I think we're able to now provide impact investment products that can help to contribute to a specific mission, whether that's, we want to empower women, we want to have an impact on climate change, or, we're in pursuit of, social justice, right? That you can really invest along each of those themes now because the products have emerged. Yeah, and I think another way that, family offices and foundations sometimes seek to magnify their impact by investing in a way that's going to draw other investors in that may be not as mission driven. So we have seen that in some of our funds where, a foundation may come in and make an investment, perhaps provide like low cost debt into a fund, which will enhance the returns and then bring in other private sector investors. So I think that blended finance model is also really allowing people to see how catalytic their capital can be.
And Kelly, from your perspective?
Yeah, so I think I'd add sort of two things. So I left the pension industry, working in responsible investment in the pension industry, to come and work with foundations and family offices. And it's particularly for the reason that that Alexa outlines, that fundamentally foundations and family offices get it. They're mission-driven organizations. And once they understand that this opportunity is possible for them with their capital, they get it. And they absolutely understand that they have an opportunity to have impact with more than 2.5% of their capital. And so unlocking the rest of that capital to align with their mission and to do something that they feel strongly about, if they can do so in a responsible and prudent way, which is what we've been busy proving for the last 10 years, is aligned with what they would like to do. And so I think that's one hurdle that larger institutional investors, still have to cross. And so I think that part helps in terms of foundations. I think the other piece, and Alexa talked about catalytic capital, but the other piece is really thinking, and what we certainly gently press our clients to think about is, what is the utility of this capital? Why is this capital here? What does this capital need to do? What is the real risk profile of this capital? And so if this capital is put there, was endowed, or it has the intention to have a mission specific output, then you should be looking at all the different ways in which you can do that, and not just traditional avenues, and looking for different models and new ways that this capital can play a role. And catalytic ways are some of those. There's lots of different structures that can be used, but opening your mind to what those possibilities could be.
Mm-hmm. Well, I'm going to ask you another question, if I may, Kelly. So could you give me some examples of investments that have resonated with family offices and foundations, and why?
Yeah, so I think I'll probably come at it more from a portfolio perspective. That's the way that we work with our clients. And so our foundation clients, we have some that come in, as Alexa's indicated, specifically to target a certain issue. And so they want to target a very specific issue, and they're looking for investments either across portfolios and across asset classes to do that, or maybe within a specific asset class. We also have other investors that come to the table from an asset class perspective that are looking for broad-based impact, be that in the public markets or in the private markets. And so we can create a portfolio for clients that pivots on in either one of those directions. I think thematically, some of the trends that we're seeing really pick up steam, and both from an interest and a product-based perspective in Canada. So, real estate-based assets have been the cornerstone of the growth of this market up until now. And I think now we're seeing, a real push on gender and diversity inclusion, and looking for products that reflect those values, and that are looking at those things, not just in terms of endpoints, but also operationally and how that works in a product. I think we're seeing a lot more conversation around nature-based capital and what that looks like, not just the renewable energy and that part of the climate solutions package, but also around how we're dealing with our natural environment, how to capitalize on some of that. And Canada's been way behind some other regions in terms of taking advantage of those opportunities.
Mm-hmm. Mm-hmm. Alexa?
Yeah, I can share some examples of investments that we've made. So through the ELU Women's Empowerment Fund, which has a broad regional focus in Latin America, a core holding for us is Pro Mujer, which is Spanish for women. And it's a leading Latin American women's development organization, started as village banking or microfinance 3 decades ago. And since that time has really evolved into, what we see as best practices for financial inclusion for women and girls, where they're providing a real full set of services for women entrepreneurs that include financial products, but also health services, so primary health services, preventative health services, and education. So, we've been investors with them for 7 years, and they've actually now become our partner in investment management for the ELU Women's Empowerment Fund. And then another example on the sustainable energy side, we're supporters of a business called Kilowatt, or KW Financial, which is a really interesting business where, we were able to provide about $5 million of equity through our sustainable energy funds, and support a portfolio of commercial and industrial rooftop solar installations. And those would be in the Dominican Republic and also in the broader Caribbean basin. And what we really liked about that was that this is an innovative business solution that is scalable and could be replicated in other areas of the region. And the Caribbean is one of the world's most vulnerable regions to climate change. And in addition, is characterized by typically very high energy prices because these countries are often reliant on imported fossil fuels. So there's just this real alignment where providing solar capacity has a really positive climate action impact, and also can make energy a lot more affordable for the client. And so, that project is a real way to demonstrate that these projects are economic when you work with an experienced sponsor and where you bundle several commercial and industrial clients together to make it efficient for capital to flow into the marketplace.
Mm-hmm. Wow. And I think that's, really interesting seeing sort of the sort of breadth of projects you've been involved with. But I mean, one thing that sort of, when I'm reading around about impact investing, I see quite a few comments about impact washing. So it's a bit like greenwashing. If people are interested in impact investing, what are the metrics? And that really goes back to sort of what you were saying, Kelly, earlier. What are the metrics that they should be looking out for?
Yeah, so there's definitely a lot in the press right now that is sort of counter to our cause. And I think that the prevalence of those articles is going to increase. And so before jumping to the metrics piece, I think I'll maybe just take a step backwards and say, on the impact washing and the greenwashing, I think there's currently a separation in understanding between what the products are designed to do, what the investment strategy of those products is versus the way that they're being judged in the public eye and in the media. And so I think that can obviously be really misleading in terms of the way that press is out there. There are legitimate concerns around impact washing and greenwashing for sure, but those have to be within the context of what the investment strategy is intended to create. There are products that have a light green type of investment thesis, and that's okay. If they're being transparent about what they're aiming to achieve and the way in which they're aiming to achieve it, it doesn't have to be the deep end of the pool every time. And for the broader investment community, we actually need products along that spectrum that have different investment characteristics, that have different impact profiles, so that different investors can participate in different ways. And so I think that point is really important when thinking about impact washing. So assuming you understand what the product is designed to do and people are being transparent about the impact that they're trying to create, and then they're measuring that. The type of metric system. So, the metrics piece is something that all folks in this industry have struggled with. It's not a science by any means. This is very much an art. And so different funds such as Deetken are trying to figure out how to do this for their own fund. And the challenge for us is really quite different because we are looking at it from an investor's perspective. So how do we aggregate all the pieces in an investor's portfolio, such as Deetken, and then roll that up so that an investor can have a sense for what their overall portfolio looks like, how that relates to other parts of their portfolio that maybe somebody else is managing, mainstream products and those pieces. And so we've created a framework internally that we're using to do that. It is focused on the SDGs, the Sustainable Development Goals, and it's utilizing the IMP, which is the Impact Management Project. And so those are two standards that are being used relatively widely. But there's a big difference too between, on the public equity side, you can pull in lots of data, and there's certainly holes in that data, but there is publicly available data. On the private equity side, it's a much more manual process, as Alexa certainly knows in doing it for her fund. And so aggregating that is, again, it's highly labor intensive.
Mm-hmm. Alexa, do you want to speak to that?
Yeah, I mean, just touching on the impact washing point, maybe this is more of my personal perspective, but I still see impact as a pretty high touch investment approach. I think you typically need to have a lot of communication and engagement with your investees to really make it work and to really achieve the outcomes that you are aiming for. And so for that reason, I think impact investing is still something that you're typically going to be talking about in millions and not billions, and certainly not trillions, right? So when people are talking about these, $1 billion, funds or bonds, I would dig pretty deep to confirm that there really is kind of impact being created here. And, when you're looking at metrics, there's counting, right? You can count the number of women that are affected or the number of services that are provided, but there's also that quality aspect, right? So like when you're looking at jobs, you can say, this many jobs were created, but like, what's the quality of that job? Is it a fair wage? is there a diverse workforce? Is it, I think trying to dig a little bit beyond those headline figures can really help to confirm that this is an impact investment or it's not.
Mm-hmm, mm-hmm.
Yeah, and then I mean on the metrics side, like Kelly says, it's a constant work in progress. I think like a lot of other impact investment funds, we've aligned our impact measurement framework with the Sustainable Development Goals, and we have found that to be a really helpful way to communicate our impact to our investors. So we've done that across all 3 funds. So for our investors, you receive a quarterly report showing the impact metrics of the fund versus all of those goals. So in the case of the ELU Women's Empowerment Fund, a big one is, of course, gender equality, but we also look at decent work and economic growth, we look at health, we look at education, and we look at affordable and clean energy. And are able to provide an update regularly based on the information that is provided by our portfolio companies. But we're always looking to improve. And so one thing that we've recently rolled out for the ELU Women's Empowerment Fund is really enhanced gender-based reporting. So we now have a gender smart investment framework where we are going to each of our portfolio companies and talking to them about their gender smart business practices. And for us, that's 33 questions about the women served in your business, women in leadership and governance, how you think about gender in your value chain. And, as that data is coming back, and we've done about 2/3 of our portfolio now, it's this incredibly rich data set of qualitative and quantitative information. And we're still working on how we're going to be reporting on that to investors. So we've done some, and then I think you'll continue to see more over time. But it's a really interesting part of our business and a challenging one.
And I'm guessing it also depends on what people are looking for. They're going to be looking for slightly different metrics, so that your investors will probably have an influence on that just as much.
Oh, absolutely. I mean, especially like the very large institutional investors and development banks, they have, a framework and that's how they want to receive the information. And in some cases, that's driving harmonization of reporting as well, which is probably a good thing.
Mm-hmm. So we've had a great turnout today. Sorry for being a bit croaky. Great turnout today. What's really interesting is the sort of the locations people have come from. We've had people from South America, Central America, the US and Canada joining us today. So I really want to open it up to you listening in and give you a chance to ask some questions. So you'll see there's a little chat box if you want to sort of pop your questions in there, and we can ask them to Kelly and Alexa. Okay. So I have my first question coming in. Can you talk a little bit about the sort of different risk returns that are out there? Who would like to answer that one first?
No, Alexa can do that one.
Yeah, sure. I mean, I think in the past, impact investing was really seen as kind of a high risk activity where you were investing in like really early stage startup companies, and it had a certain profile. And I think over the years that has really changed, and that you can now invest, across the risk return spectrum. And like Kelly was talking about, like, there are some, basically like GIC, what's the US equivalent of a GIC? Savings products, basically, that have low return and are invested in impactful ways and are very low risk. And then, there's also fixed income products, there's equity products, and, we're also seeing the rise of these blended finance products where, for example, for our fund focused on Central America, the Honduras Renewable Energy Financing Facility, we actually have a portion of the capital was provided by the Inter-American Development Bank and was placed at first loss to other investors. So that was really meant to catalyze additional investment into, and in this case, Honduras. And any investments that do not go well in that country, the first loss would be taken by this catalytic investor. And that really helped us to raise additional private sector capital for that fund, while still achieving our mission of deploying capital in Honduras. So these kinds of structures can be really helpful to kind of fine-tune the risk return profile so that each investor is at a place where they're comfortable.
Mm-hmm. Kelly, do you want to add to that?
No, I mean, I think so. I don't think that the risk return profile is really that different than mainstream investing. It's very much asset class by asset class. And if anything, the data and some of the better meta studies that we've seen over the last few years have shown that looking at impact and ESG is neutral to positive in terms of risk and return. And so I think what we are definitely seeing on the ground is that at this point in our societal development, we are seeing a huge amount of movement into this area. We're seeing tremendous benefits in terms of reducing risk, in terms of HR, in terms of, personnel. People want to work in businesses that are aligned in this way. They have lower costs of capital almost universally. Again, we've got lower risk businesses that are doing better things, that have a more sustainable outcome for the future, and that helps their financial returns.
Mm. Good point.
Question, how can I get started? Do I do it myself or hire someone? Are there any investment minimums, and what are the fee structures? Quite a lot of questions there, but I think really good ones.
Well, I can start with some of those. So we get the how do I get started and do I do it myself question all the time. And that shows up for a lot of folks, particularly in the foundation space, as a barrier. So, there's a saying that if you know one foundation, you know one foundation. And, in the foundation space, we see foundations that, and particularly even outside of the Canadian boundaries, that are really large and well-staffed and have all sorts of support services. And we also have lots of foundations that have no staff or one staff, and trying to figure out how to do this.
Right.
So I think there's a few basic steps. So one is to educate yourself, to listen to webinars like this and read materials. There's a lot out there at sort of the 101 level to say, what is this? How do I do it? Where do I even get started? I think for foundations universally, regardless of their size, you have a board, you have investment committees. And so getting those folks, not just the one champion, up to speed and interested in the subject matter and willing to move forward. The governance piece of this takes a while. It takes a while to get everybody there. It takes a while for folks to figure out the way in which they want to do this. And then, based on your scale, you can decide whether this is something you want to take on internally and train up a staff member and really dive into this, or if it's something you want to outsource. And there are increasingly more options for getting some help on this. I think it is still true in a lot of spaces that asking your existing investment managers won't necessarily get you anywhere, but you're more likely now than you were 3 or 4 years ago. And even if it doesn't get you anywhere, please keep asking those questions, because all asset managers need to be answering these questions. And then reach out to the right people. I think one of the things that I love the most about working in this space is that it is incredibly collaborative and generous. And, Alexa and I probably spend far more of our time answering questions for folks because we really want to help them than is good for either of our business models. That is the nature of the folks that we work with and the place that we choose to spend our time.
Mm-hmm. Alexa, do you want to add to that at all?
No, I mean, I think that's, what was the second part of the question around?
Investment minimums, fee structures, and yeah.
Yeah, so I mean, investment minimums have come down a lot. I mean, this definitely used to be a space just for high net worth and large institutional investors. But now you can do impact investing with $500 or $5,000. There's quite reasonable investment minimums, and they're coming down all the time. So I don't think that needs to be a barrier anymore. But I think for some equity funds, there's still the kind of typical private equity $1 million minimum is not unusual as well. So I think it's just a question of really understanding the landscape and knowing what products are available. And there's been a lot of work around surfacing what are impact investment products, so that to reduce that amount of work, so that more families and family offices and foundations can get involved. So, in addition to groups like Rally, there's in Canada the Social Venture Exchange, there's Tonic, there's are there any others that you can think of, Ellie, that kind of collate all these opportunities into one place?
Yeah, and within different communities, there's other groups that are doing this, right? So CFC, the Community Foundations of Canada, provides a ton of support for their members. PFC does the same thing in the philanthropic side. So there's lots of different associations and groups that are starting to focus on this and look at it. I mean, I think the only other thing I'd add in terms of minimums is the retail space is not yet developed really globally, and certainly not in Canada on this front. And so that is the holy grail for some folks and what some people are seeking. And certainly it's one avenue towards really democratizing this process. We've seen more movement in Europe and in the United States than we have in Canada. Canada will get there, but it's not there yet.
Mm-hmm, mm-hmm. Can you accommodate specific exclusions that we may have in our investment policy statement?
Typically, yes. So the most common exclusion is fossil fuels that we have encountered, and that's easy for us because for the most part, because we don't invest in that space, so we have been able to accommodate that. And then, I mean, I think most other exclusions, clearly like munitions and tobacco, like these are not typically things that are in our portfolio. So those are also quite easy to accommodate. Yeah.
Mm-hmm. Yeah, so I think Alexa's right. Like within the impact space, exclusions doesn't come up as much because it's not, the things that would be excluded are pretty fundamentally opposed to what it is that we're looking to do anyway. On the ESG and RI side of things, there's definitely lots of options out there for accommodating those types of exclusions. And I think from what we see across, a diverse set of investors and their investment policy statements, those exclusions are now fairly common, and most asset managers can accommodate for those. I think where there's some nuance there is around what counts as an exclusion, right? And so that's also partly where there's headline risk and where you see funds getting, put on the front page of the newspaper because they're holding something that, somebody thinks is against their policy. And so that's part of the depth of, and Alexa touched on this implicitly, but not necessarily explicitly, that impact investors are looking not just at what a company does that would get it excluded, but also how they're doing it. And so, you can have a solar company that on the surface of it looks like a great impact investment. They're creating solar panels, but maybe they're using child labor and they're polluting their, the rivers and waterways around where their production facility is. And so, is that an impact investment? And so, from the way that we look at it, we are looking at everything very critically through both lenses to make sure that that we've got both pieces of those going, and that those types of things aren't slipping through, slipping past us.
Mm-hmm. Yeah. Like we have exclusions within our own investment policy statements. Like, for example, when we invest in hydro, we're typically looking at small run-of-river hydro projects, and we would not invest in a large hydro project with a dam and a large reservoir that, required relocation of a lot of people. And, that's really not the kind of space that we would invest in. So we invest in sustainable energy, and for the most part, we're looking for those projects that have quite benign environmental impacts. Nothing has no environmental impact. Even a solar project on a bare field, is going to, it gets in the way of the snakes that are trying to cross the field. I mean, there's always something, right? But, I think by the kinds of projects that we target, it's pretty limited.
Mm-hmm. And you've alluded to this a bit, Alexa, but, been asked the specific question, what kind of investors do you have, and can you talk about them?
Sure. So the sustainable energy funds, which are the Caribbean Basin Sustainable Energy Fund and the Honduras Renewable Energy Financing Facility, those funds are more institutional in nature, and the lead investor is a development bank, and then some larger U.S. foundations, and more recently we've brought in some Canadian foundations, which has been great. And then for the ELU Women's Empowerment Fund, the investor mix is a little bit different because that was originally designed to allow, individual investors to participate, not. So that is about 50-50 North American and Latin American investors. We have, I think, 7 foundations have invested, all Canadian foundations. which has been really great. And we also have credit union investors, so a large Canadian credit union as well as a Latin American credit union.
Fantastic. Okay, I think we have answered all the questions that are out there. If there's anybody else, just get in there. I'll see if there's any more chats coming through. Okay. So, just had a problem with listening to you, Alexa. Hopefully everybody else was okay on that one. You'll see on your screen, so as you may be aware, Deetken Impact manages 3 funds with total assets under management of over 100 million Canadian dollars. They're currently raising capital for all 3 funds, including for the ILU Women's Empowerment Fund, which you heard Alexa speak about, which invests in businesses that support women's economic empowerment in Latin America and the Caribbean. And there are 2 sustainable energy funds focused on Central America and the Caribbean. If you're interested in investing, please contact Alexa directly. There's a button on the screen. And we'll also be providing a follow-up email with all the contact details if you have any specific questions. If you have more questions about Raleigh Assets, Raleigh Assets has been recently been registered as a portfolio manager and is able to work with both discretionary and non-discretionary. And if you're interested in investing, we'll send through via email Kelly's contact details, or you can press the button on the screen right now. All right, and thank you very much for attending today. I hope it has helped you see how impact investing is growing and that it can help align your values with your return expectations. Thank you for your time today, and we look forward to seeing you at future events. And as I said, please look out for the email and feel free to follow up directly with the individual members to find out more information.
Thanks so much, Victoria, and thank you, Kelly. It was really great to share this webinar with you today.
Yeah, well, thank you so much for having me.
Very welcome.
Thanks, everyone.